All right, so today we're going to do something really useful. We're going to take what looks like a super complicated financial document, a fact sheet for a global fund, and just break it all down into something anyone can understand. Let's jump right in.
So think about this for a second. How in the world can you invest in thousands of companies all across the globe with just one single tool? I mean, without having to buy every single stock one by one. Well, that's the big idea we're going to unpack right now.
First up, let's just get our heads around the big picture idea here. What exactly is this thing, and what is it even trying to accomplish?
Okay, so the magic behind all this is something called an exchange-traded fund, or ETF for short. And honestly, the best way to think about it is like a shopping basket. Instead of going down the aisle and picking out thousands of different items yourself, you just buy one pre-filled basket that already contains a little bit of everything. It's a super efficient way to get a wide variety of stocks.
So what's this particular fund's mission? Well, its one and only job is to simply mirror the performance of the global stock market, which includes both the big, developed countries and the faster-growing emerging ones. The key thing to get here is that it's not trying to beat the market. It's just trying to be the market.
And when we say the market, I mean, just how big are we talking? Well, check this out. This single fund holds stocks in over 2,500 different companies. That's just a wild amount of diversification, all packed into one thing.
And where are all these companies from? Well, they're spread out across 49 different countries. So you're really getting that global feel, from the US to Japan to Europe and way beyond. It's all in there.
Okay, so we've got it. It's a huge global basket of stocks, but what's actually in the basket? Let's pop the hood and take a look inside.
Right away, you're going to see some familiar faces. These are the heavy hitters. NVIDIA, Microsoft, Apple, you know these names. It makes the whole thing feel way more real, right? When you own this ETF, you own a tiny piece of all these massive companies.
Now, if we slice it up by industry, you can really see what this fund is all about. Look at that. A huge chunk, over a quarter of the whole thing, is in information technology. Then you've got a big piece in financials, too. This tells you the fund has a strong tech and finance flavor, which means its performance is going to be pretty closely tied to how those big sectors are doing globally.
And what about the map? Where in the world is our money? Well, even though it's a world fund that covers 49 countries, look at that concentration. Nearly 2/3 of the whole thing is parked in the United States. So here's the key takeaway. It's global for sure, but it's got a very heavy tilt towards the US market.
All right, time to get into the nitty-gritty details. Every financial product has some key stats, and these are the ones you really want to pay attention to.
First up, the total expense ratio, or TER. Just think of this as the annual price tag for owning the ETF. It's the fee that covers all the background costs of running the fund. And with fees, the rule is super simple. Lower is pretty much always better.
And for this fund, it's just 0.12%. That's incredibly low. It's a huge deal, actually. A lower fee means more of your money stays invested and working for you, instead of getting eaten up by management costs.
Okay, a few more quick facts here. You've got the unique ISIN code. It's been around since 2011, and it's based in Ireland. But the one I want you to focus on is accumulazione. All that means is that any dividends from the companies are automatically put back into the fund to buy more shares. It's like putting your investment on auto compound.
Okay, so we know what it is, we know what's in it, we know what it costs, but the million-dollar question is, how has it actually performed over the years? Let's check out the track record.
So when you look at these long-term numbers, one thing should just jump right off the page. See how incredibly close the Fondo number is to the indice number? That's the whole point. It tells you the fund is doing its job perfectly. It's tracking the index it's supposed to almost exactly. That's a sign of a well-run fund.
But looking at it year by year tells a slightly different story. It's easy to get excited about the big returns in 2023 and so far in 2024, but then you see 2022. A drop of over 18%. And that right there is a really powerful reminder of the #1 rule. Investing is risky. The value can go down just as easily as it goes up.
All right, we've gone through a lot. So let's bring it all home and recap the most important things we've learned just by looking at this one document.
So what do we figure out? We saw that with one single investment, you get this incredible global diversification. You get exposure to the biggest companies on the planet, and it costs you very, very little to own. And we saw that it does exactly what it says it's going to do, mirror the market. But we also got that crucial reminder that markets come with risk.
When you really boil it down, an investment like this is basically a bet on the future of the entire world economy. It's a bet that, over the long run, will keep innovating and growing. Now, that journey is definitely going to have its bumps, which leaves us with one last thing to think about. Are you ready for the ride?